Well, thank you for joining everyone for this week's episode of Mortgage Matters with Chris. Chris, thank you for being here.
Thank you, Mindy.
Chris and his wife have combined almost 50 years in the mortgage industry, so we love hearing insights from you. You have been in the mortgage industry since the 90s, and you've seen a lot of stuff. So today's topic, I think is an interesting one. It came across my radar recently in the form of a couple news articles, and I think it's very telling. So, Chris, if we're ready, I'm just going to jump into what I found.
Let's do it. Let's do it.
All right. So, a couple articles out there that these are estimates that Wall Street investors, private investors, are setting aside somewhere around $110 billion with the intent on purchasing single-family homes and to have them as rentals. Not all single-family homes, but they did mention that the mass majority of them would be single-family. So I suppose some of that $110 billion might include, apartment complexes and maybe some commercial stuff as well. But wow, that was estimated. So it's estimated that currently they have, again, these private investors that own real estate, about 3% of the market of single family homes, which, you hear 3% and you're like, oh, that's small. But in this terms, that's not a small number. That's a pretty large number of homes that they have, that a few, handful of people have. And this could get them very easily another 3%, maybe even more, depending on what they do with it.
Yes. And if you look at it, Mindy, $110 billion, if, in today's money and based on today's market, you're looking at a huge chunk of homes that they're looking to buy. It's not just we're going to go out and buy a few houses. And it tells us a few things. If Wall Street is investing in real estate, doesn't that make sense for us as, people that are renting to maybe get out there and buy our homes before we get stuck, paying for these huge Wall Street banks mortgages, which is pretty much what they're doing. And as we can tell, the last few years, they bought a ton of real estate, which accounts for 3%, which may not seem like a huge number, but it's a very big number when you're talking about Wall Street coming in. And now they're about to double down with this $110 billion of money to go buy more properties. I think there's a number, and I'm trying to see if I can figure that number out. So right now, there's $110 billion, $30 billion has already been committed to properties that were being leased or developed, that's a big deal. So I live in a little place, for those of you that are listening, called Lakewood Ranch. Mm-hmm. And one thing that these Wall Street investors are doing, which is genius in a sense, is they're literally building a whole community of single family homes that are for rentals. So new construction, single family homes, huge development. I forget how many houses but it's, close to 1,000 homes that are going to be just for rent. Single family. We all know that there's huge apartment complexes that people rent from, but now we're seeing something a little different where Wall Street is literally investing money to buy these single family residents. So, that money that they have, the $110 billion, could roughly buy them another $400,000 homes. 400,000 homes. And that's about what the math would come out to. That's a huge, huge number. And right now they own about 700,000. So based on their 3%, they have about 700,000 of the homes, right? And in the whole scheme of things, let's just say that the nation has about 20 million single family rentals, right? Right now, that if they get the next tranche of all of this, it's going to add to, as Mindy said, the next 3%. So that's a big tranche of homes that are going to be gobbled up. And I think it's important for us as realtors, mortgage professionals, people who want to go buy homes, like hardworking American people that, have been sitting on the sidelines. Let's not compete with Wall Street, because, if you're renting and you get stuck in this vortex, if you will, your rents are going to go up, and they're going to change a little bit of how the market is driven. on how they buy. And I know you and I, Mindy, share a same similar experience where when I first came down to Florida, I didn't buy right away because I didn't know this area well enough. I wanted to kind of test the waters, new to Florida. So I rented, and I rented for a company, I think Invitation Homes, and Mindy, you use the same company, so you're familiar with the way they operate. And they owned a large chunk of homes here in Lakewood Ranch.
Yeah. It's hard to find down here any homes that's not owned by, I think that's them and maybe one other major corporate company. And so it, if you think about it, like no one likes bureaucracy, right? So the reason that this is problematic, well, there's many reasons it's problematic, but one big reason is because it creates such a miserable experience for, people who would want to get in their own home or maybe are trying to check out an area, kind of like you said. And if these are getting gobbled up by these corporate interests and these major investors, does that squeeze out people like you and I who want to buy up some real estate? Like, if we don't act, it does.
Well, because they're buying them cash.
Yeah.
So the seller, right, is going to be, they'll be attracted to a cash buyer, big investor that's coming in and taking it. So, less headaches for them. And as they keep coming in and steamrolling and buying these properties, and I'll just kind of add one little piece and caveat to that. If you get stuck rented from one of these guys, I'm going to give you a couple tidbits because I was proactive in my situation because I know how these people operate. If you leave a deposit, or you put your first, last, and say you put a security, they have zero intention on giving you your money back. Zero. And I'm going to share with you how I know that from experience. So when we moved out of our house, we were only there for a year. That was what we planned on. We didn't even hang a picture on the wall because we knew it was short term. I didn't want to deal with, having to patch walls, paint walls, do all that crazy stuff that comes with leaving a rental, which again is a pain, right? If you own your own house, you can put what you want on the walls. That's on you, right? If you rent from somebody, you are stuck doing whatever they have to do, and then you're at risk of losing a deposit. So when I was leaving the house, when I moved into it, it was horrible. It was a disaster and a mess. When I left it, we scrubbed the floors, we scrubbed the walls, we scrubbed everything, and I videoed and recorded every nook and cranny of that place. From the floors, I put out new mulch on the mulch beds, brand new. We did everything. When I say I did everything, but I recorded everything and took pictures of everything. True story. I'm calling for my deposit. And where is my deposit back? And the lady walked me through. She's like, "Oh, this looks great. You did a wonderful job." I'm like, I shouldn't have any problem with my deposit, right? Now, I had my ace up my sleeve. I knew I had all the pictures. I knew I had all the videos, but I didn't tell them. And she's like, "Oh, it looks great." After I started bothering for the deposit, I got an email with a laundry list of stuff how I left the house. That was untrue, right? This is what you deal with when you're dealing with Wall Street if you're renting from folks. This is real. I had a laundry list of stuff that was untrue. So I then proceeded to send my 100 pictures of every nook and cranny of this house being in perfect condition without a hole. And in my video, I was saying, I know you guys are going to say I had holes in the walls, but as you can tell, I didn't even hang a picture up in this wall. It was amazing that once they got that video and those pictures, they retracted their statement immediately. It was unbelievable.
You had advised us because that had happened to you like 1 year prior to my husband and I, and you had advised us. I remember you saying, "Get video." And so we did. And that saved us. It was insane. But the thing is like, people have to rent sometimes. You're new to an area. It's not a bad thing to rent for a short period of time. In fact, a lot of times it's smart, when you first go somewhere. Right. But how much better is it to rent from a landlord, like a small landlord who owns a couple properties and is local to the area, And I think the reason we're talking about this, Chris, is one, we don't want people who want to buy their first homes or buy another single family home to get squished out of the market, right? And then two, we don't want people who are looking to invest themselves personally to also get squished out of the market. You know, I know in later weeks we got a plan. We're going to chat about all the people who bought in 2021 with super low interest rates. Like, what's the next opportunity for them? So we'll talk more about that. But I think just as a little teaser, those people are in perfect positions right now in this coming year to become those investors, to become landlords themselves and set themselves up for, you know, a better future by buying into real estate.
And I think that's important. And I also think, you know, what people don't know is behind the scenes right now, you have Congress really fighting for us to introduce a bill that's to stop these Wall Street investors from buying single family homes. Because what's worse, right, is you're already going to be competing with other people. We already have a shortage of inventory, right? And it makes it very difficult for us as people that are looking to buy homes to have to go compete with those Wall Street buyers. So hopefully they will pass a bill at some point. You know, it's going to have to go through all the rigmarole that it has to go through to the government to get that. But in the meantime, like today on, that bill isn't in place. So you guys have to get out there and do your homework and try to get in before these guys get in, and hate that American dream. It was once the American dream, and I believe Wall Street's turning it into the, you know, the Wall Street capitalist dream, which is all good and everything like that. I'm not.
Yeah, we're not against Wall Street. We just don't want people to get squished out, you know? So, and that's interesting that you bring that up, that they have, that Congress has, their eyes are on this, right? You know, whether something passes or not, who knows the legality of what might be coming down the pipeline. But here's what we do know, because they have already implemented and they've made it very clear that their priority this year is first-time home buyers and getting people who are renting out of renting into their own home. And we know that because, well, one, they told us directly, like the FHA came out, or I'm sorry, the Federal Housing Administration came out and said, our focus is first-time home buyers. And then in addition to that, they have upped and created a bunch of new programs specifically for first-time home buyers to get in. And Chris, we've talked about this in the past. So if you are interested in learning more about that, we can link to a previous episode where we went all into that. But the point of this is that everyone's goals right now is to help the people who've had such a hard time in the past couple of years jumping into the market.
Correct. Where people were overpaying. I mean, again, Wall Street has an unlimited amount of funds, right? So they can pay higher prices, which kind of squeezed this first-time home buyer market out a little bit, like people that really deserve the opportunity to buy. And now these agencies are fighting back for that first-time home buyer and those people that might not have the highest apprentice scores. Maybe it's because they're paying too much for rent and too much for eggs and gas and everything else that they're paying. And they get a little bit strained, you know, by putting them into a home at a fixed price where they're not going to have to worry about that going up every single year at a outstanding rate. I mean, I can't tell you some of the increases I saw over rent over the last couple of years in our markets, what people were forced to pay. We're trying to help you guys. We're trying to help you as real estate agents get more buyers to the table. The barrier to entry is getting a little easier for some people, for some of that demographic, you know, those first-time home buyers. A lot of states right now, as we have here in Florida, for HEROES programs, like people that work for, you know, police officers, firemen, teachers, you know, people that might not be making hundreds of thousands of dollars a year, and they feel like they're restricted from, you know, really getting into some of these markets and buy. There's programs and money allotted to go out and help those people, you know, buy. So we just want to be, okay, if you're thinking real estate isn't a good investment right now, think again, because Wall Street isn't putting their money in bad investments.
Exactly.
And that's really the bottom line of really the one point I want to get across. If you think that I'm going to wait because it's not a good time to buy. Go look up, do your own research, do your own due diligence. Say, is Wall Street out there buying real estate right now? And you're going to see that they've allotted this $110 billion to aggressively attack the single family market. And if Wall Street's doing it, you can probably bet they're doing it because there's a return on that investment at some point down the road, which means what, guys? It means it may be a good investment for us to buy a home as well at this time if the experts and what they do with their money are doing it. So keep that in mind. Don't wait for some crazy low rate that may or may not come, or some crash that I can confidently say we're not going to see a crash just based on the truths of the market right now, where people have equity in their homes. Unemployment is up. Unemployment is low, considering where it was in 2008, where it was really high. Equity in homes was zero back then. There's average about 30% equity in today's market. So, and there's a shortage. There's a shortage in real estate versus back then there was tons of real estate on the market because everyone was foreclosing. So you have every box is checked. That now we might not like the rates. Maybe the rates aren't the most favorable, but it's still a good time to buy, and buy before Wall Street buys. They're investing. Invest in yourself. You know, don't help their investment go up by getting stuck renting from them. And you know, we're about at 118. So if you want to have more conversations on this, we love as if you're an agent, real estate agent, insurance professional, some of our tax CPAs are on this call, and our clients, obviously, family, friends, anyone who's listening to this, please give me a call. I'd love to spend some time talking to you about it and giving you some resources to do your own due diligence with. And really, my goal and objective here is to help people get to the end result, which is truly the American dream, which is home ownership is considered the American dream, right? Owning your own home and getting there without hearing all the noise in the background and looking through the fog and the weeds and seeing the truth is where it's at. So any questions you guys have, Mindy, thanks again for, working with me on putting some of this material together today, but this is a big one. If it's good enough for Wall Street to invest in, it's good enough for you.
That's right. Chris, thank you so much for taking the time. As a reminder to everyone, you can find this video on YouTube later if you like watching. If you like listening, you can find this on your favorite podcast platform. And as our shameless plug, we also have an article on this, blog article. Our website is mortgagedreams.com. You can also find out some information there. So Chris, we'll be back next week, same time, same place.
All right. Thanks, guys.
Bye.